Hi everyone, welcome to the Advanced Mortgage Solutions podcast. This is a podcast that assists people on their property journey. Whether you're a first-time buyer or seasoned investor, we cover all topics. I'm Joel Sadler, and our mortgage expert today is Scott, owner and founder of Advanced Mortgage Solutions. G'day, Scott.
How are you?
Scott's been a property investor for over 20 years, and his professional background was in logistics, management and finance. So this technical knowledge, combined with real-world experience and property investing, the mortgage insights, gives us powerful information and IP that Scott's gained over the years. So as we know, knowledge is power. So today we're going to talk about and unpack the auction process. So I've purchased my last home via auction process, Scott, and it wasn't my first time, but it was quite a nerve-wracking process. I went in with a very aggressive mindset because my wife was heavily pregnant. And I definitely overpaid for the property, but I was happy to do that at the time because I was kind of desperate, I suppose, if you know what I mean. But there's a lot of nuances there that I wasn't aware of, and I found it quite stressful trying to come up to speed with, what am I, not just the strategy, but also what are the rules and what I need to do to be successful, So do you want to start off by giving us a bit of an overview of the rules applying to buying a
It is
home,
a great
at auction?
question, and let's put it up front that auctions aren't particularly first home buyer friendly. And what I mean by
Right,
that
yeah.
is that you absolutely have to be pre-approved, and you have to have had the house that you're looking to go to auction on signed off by the lender before you go to the auction, and you have to have insurance in place to purchase the property. Because once you win the auction, there's no,
Yep.
oh, sorry, I've changed my mind, or actually, I can't get insurance. You're in real trouble because you've
Oh,
gone unconditional by winning the auction. So,
well,
um, I'm sure you've got some questions around the first home buyer bit, subsequent to the question that you've asked now. But the real thing is you have to be more prepared to go to auction than any other type of way of purchasing. So price by negotiation or deadline sales are big in Christchurch, for example. Both of those options, you're
yep.
able to put your own conditions in your offer, and then use those conditions through your due diligence period to find everything about the house. With an auction, it's
Right.
almost completely reversed. You have to go out and find everything about the house and spend your money, just to get yourself at the auction in a position where you can stick your hand up and start bidding on the house. And that can come with some cost depending on whether you have a 20% deposit or not.
I see what you're saying. So basically, because the bidding process of an auction's final, if I say bid on a home and win it, then the due diligence and all that can't be done afterwards. It has to be done prior, and I have to be ready to go, I suppose, and literally ready to make a deposit.
That's right. And the
Sort of thing.
bank needs to be ready
Yeah.
to go because a pre-approval only
Right.
assesses the applicant. It doesn't assess the security that that applicant is looking to purchase. And if it's going to auction and you win the
Oh,
auction, they have to have signed off on that security before you go to the auction. Because you could imagine, Joel, going, winning the auction, taking the very
yeah.
proudly taking your signed sales and purchase document to the bank, and they're going, we would never have agreed to buy
Yeah.
that property. Uh-oh,
Yeah.
now there's some real trouble.
Right.
So
So,
that's why there is that need just to get things signed off, including insurance, right? For exactly the same purpose. There's no point winning
right.
the auction and then going to try and get insurance, and the insurance company just turning around and saying, sorry, we can't offer insurance on that property. You're in exactly the same position as not having finance accepted on that property.
Right. And so I imagine with the insurance, the bank would require the insurance. Would that be fair
100%.
as
Yeah.
part
Look,
of the
no
lending?
insurance or
Yeah. Yeah.
insurance with conditions is
Mm.
no finance.
Yep.
Yeah,
Yeah.
yeah.
Right. Right.
So
Gosh.
super
Okay.
important to get those two things aligned. So when you're sitting at the auction and putting your hand up to bid that you're absolutely able to do that.
Yeah. And so how would I get the bank to check the property out as a
Yep.
first time? So let's just say, first time buyer situation, not sure the process. How would I
Yeah,
say to the
certainly.
bank, hey, check this property
It's a
out?
great question. And look, if you're using like
Mm.
our services, for example, then we would request a copy of the pre-auction pack that comes along with options, and within that pack you'll find things like the sales and purchase document, the rates demand, a lim, title, all of that
Yep.
information that the bank really need. So we would send that through on your behalf. We'd probably need at least sort of 5 working days, particularly if it's busy, before the auction starts, to give the lender enough time to pick it up and assess it and come back to us and say, yes, look, that particular security is absolutely fine. Allow your clients to go up and bid up to the point of the pre-approval that they've been accepted to. And then off to the side, we have some contacts with particular insurers in New Zealand. That doesn't stop people going out and getting their own quotes directly from other insurance companies, just to cover off the insurance angle and again be satisfied that when they're at the auction ready to bid, they know that they're completely enabled to do so.
Right. Brilliant. Okay, well, it sounds super important, and yeah, really good tips there on being prepared to bid. And then so, once someone is pre-prepared, say for example, uses you or a mortgage broker or mortgage advisor, gets all their ducks in a row, goes to auction, manages to win the auction. What sort of then what's the process after that to, what sort of rolls out then? Do they get an email? Does the bank kick into gear straight away? What sort of generally folds out?
You would need a copy of the countersigned sales and purchase document, so it shows that the vendor's accepted your offer and you've accepted to take that offer on. That can obviously only
Mm-hmm.
happen by winning the auction. By that stage, the bank
Mm.
already have all the information, so all they need is that signed sales and purchase document, which then says, okay, we now have a confirmed live contract on that house. Very quickly, because they've pre-approved the house and you, they would send out an unconditional offer of finance. We would then let the purchaser's solicitor know that, so they know that everything's tickety-boo, and we're just really heading towards settlement now. As part of that, we'd organise um, you know, pricing and loan structure meeting with the client to make sure that we are setting up the loan in a way that suits them and not the bank.
Awesome. And just for those listening that might not understand what the settlement means, that means literally the day the money's paid from the purchaser's bank to the seller's bank or vendor's bank, and the keys are handed over. Would that be fair to
Yeah,
say?
but the
Yep.
handover date where you
Yep.
take ownership of the house
Yep.
and can move into it, it becomes your house on the settlement date. Yeah,
Awesome. That's when you pop the bottle
that
of
is
champagne.
exactly the time. Yes, yeah.
When an auction's brought forward, or you get, say, if you're, looking to bid on a home and it's brought forward, what's happened and why would they do that?
Really good question, because a lot of people get confused about this. I mean, generally, once a house has been put up for auction, it has to go to auction, right? So by bringing the
Right. Yep.
auction forward, it doesn't get rid of the process of having an auction. It just brings the auction to a closer date. So what you might find is, say, we've got an auction date 2 weeks away from us now. The vendors received an offer that they're prepared to bring that auction date forward to uh, have the auction run on that day. And the idea of a
Right.
purchaser making that kind of arrangement is it's trying to cut off other people getting ready to go to auction, the same auction, by not having all of this time that they would have had. The 2 weeks that we just talked about might come down to a couple of days. And the attempt by the
Right.
purchaser is to cut other people off that they can't make it to the auction in time. The auction itself still has to take place, right? Because it was sold under the
Right.
auction
Right.
rules. That means that it has to still go to an auction. It does not get rid of the auction, and that's what some people who do put in a pre-auction offer think, that, oh, okay, now I've won the house. Not quite, not yet. Yeah.
Yeah. Right.
Mm.
Right. So for a seller, for them to agree to bringing forward an auction, it must have been a pretty
Must have
good
been a
offer,
pretty
right?
good offer.
Someone must have
Yeah,
made a good
exactly.
offer.
Why
Yeah.
would you
Right.
take potential
Yeah.
bidders
Yeah.
out of the room? It would have to be something pretty special.
Yeah.
Yeah,
Right.
or
Okay.
or for
Interesting.
themselves, they're under some kind of time pressure that maybe we're not aware of. Maybe they needed to bring
Yes.
it forward
Yeah.
because now they've found another house that they want to purchase, and those dates didn't quite align up. So, but mainly it's
Uh,
because they've received an offer that was just, wow, okay, we don't want to lose this potential bidder. Let's bring the offer forward, the
yeah.
auction forward for them.
purchasing the first home, I see everything in life as a bit of a learning experience anyway, right? And so if you end up bidding on a home and don't get it, it's just disappointing, obviously, but it's a bit of a learning process. So if someone was, part way through getting, say, an inspection done and hadn't finished the insurance part yet, and then all of a sudden they get a notice that an auction's been brought forward, um, would they normally reach out to you and sort of go, well, what do we do here? Like, how do they kind of make that decision? Is it worth them continuing through the process, do you think? What's your sort of, after your years in the game, do you think it's worth someone continuing through
But
and rushing through to
I
auction?
suppose
Or
it depends to how far you've got through your own process of getting ready for the auction. You know, if you can put pressure on
mm,
the building
mm,
report guy or the registered valuation guy or your solicitor or whatever's required to get you still to the
yeah,
auction, because remember, the auction still has to take place. It's just whether you can get there
yeah,
in a position where you can put your hand up and bid, as we've just talked about.
mm,
So if you've only
yeah,
just really started out and haven't got any of your ducks in a row, you'll probably find that if there's only a couple of days to the auction, that you wouldn't be able to get there in time. Your insurance, your solicitor to check the limb and the title, for finance to go and get it signed off by the lender. So there's no
yeah,
yes or no answer to what you've said. It just depends how far through the process you
mm,
were yourself. Yeah. The bigger lead in time you
yeah,
get to
yeah,
an auction, and the more you can prepare yourself to get to that auction, the better. So in case it does get brought forward, it doesn't matter to you because you're already ready to go and bid at that auction anyway. Yeah.
yeah. And then what's your experience? So, you could argue that, as you said, for a first home buyer, they're almost better to, I mean, generally they'd be buying the lower end or mid tier valuation of a property
Yeah.
anyway. My understanding, unless the market's running super hot, it's generally highly desirable, more expensive properties, say that, I don't know, in the premium suburbs of a town that go to auction because there's people lining up to buy them that have got lots of money. But if you're a first home buyer, you could almost, um, and the market's not running super hot, you're almost better to look for something that's available where you can just make an offer as opposed to going to auction. Would that be fair?
Would be absolutely fair, particularly if you don't have a
Yeah.
20%
Mm.
deposit. Now, the reason I bring this
Oh,
up is if
yes.
you don't have a 20% deposit, then it's very, very likely that the lender's going to ask for a registered valuation for the property. Now, they can be up to $1,000. You can go and spend your $1,000 on your registered valuation, possibly $600 on a building report. You're going to spend a couple of $100 with your solicitor, and then you get to auction. First home buyer, you might find that the very first bid at that auction is above your pre-approved amount, and you've gone and spent the thick end of 2.5K, and you didn't even get a chance to put your hand up once at the auction. I've seen it happen. So that's where I was saying at the start of the show that, auctions are not generally first home buyer friendly. They are more friendly if you have a 20% deposit, because then there isn't a need to get a registered valuation. So it takes that, $800, $1,000 cost away. But just be prepared to know that there's other people out there with possibly deeper pockets than you. And if they like the house, they may be in a position to outbid you.
Yeah. And I've seen that as well on, arguably lower value stock, housing stock or a house, um, and often wondered why it's going to auction, and I realised it's the land, the value underneath, where property investors or builders will come and bowl the house and then put some apartments up on it. So that's quite interesting to be aware of, isn't it?
And
As you might think, hey,
yeah,
this is,
and that first home
yep,
buyer
go.
stock is exactly the same stock
Mm,
as entry level rental properties or development
yes,
properties. And you'll find that those particular types of purchases might have deeper pockets than the average first home buyer. And depending on how attractive that particular piece of land is, you might find again that you're being outbid by someone that's just got more horsepower than you have. Yeah.
yeah,
It's
awesome,
not nice, and that's why,
yeah,
largely price by negotiation or deadline sales are so much more first home buyer friendly in that regard.
yeah,
Yeah.
yeah. Can we take 5 minutes to unpack that, Scott? So price by negotiation. Give us a rundown on
Yep.
what that means. What does
Yep.
that
So
mean?
price by
Yeah.
negotiation, you'll typically find in the advert from the real estate agent that they'll list a price and it will say offers above, 550,000, for example. And it just means that the vendor is open to having offers placed on their property, and then pick one that they particularly like, and then agree to countersign that and say yes, right? The advantage of doing it that way is that you can place conditions in your offer, which you can't do with an option. And it just means that you give yourself, say, 10 or 15 working days due diligence to go and do your building report, your registered valuation. It gives your solicitor time to check out the limb and the title. It gives the bank the time to do their checks on the house. You know, it's a lot slower and calmer, and you're only spending money because now you know you've had an offer accepted on a property. Huge advantage
Right.
there. A deadline
Yeah,
sale is
yeah,
similar, where they'll probably say, um, offers in excess of 550. Let's use the same example. But the only difference
yep,
to this is that for each offer that the real estate agent receives, they'll put it in an envelope. They'll gather all of the offers, and then on the deadline sale date, they'll go to the vendor, they'll open all of the different envelopes at once, and then it's up to them, the vendor and the real estate agent, to go through those to see which one they want to accept. Now, you might find that the highest offer is not the offer that's always accepted, particularly if, for example, one of the clauses in the highest offer that was presented has subject to sale of an existing property. And it just means that, okay, now the vendor knows that they have to wait for the potential purchaser that they've agreed to um, choose has to sell their house before they're going to have the money to buy the house, right?
yep,
And that's where someone that might
yeah,
have a slightly less purchase price, a slightly lower purchase price, but no subject to sale clause, has a big advantage and says, hey, look, we're going to take it, even though it's slightly lower, because we know it's more immediate.
right. Interesting. Yeah, it's quite strategic,
Yeah.
isn't it? And so it sounds to me that path, the um, offer or price by negotiation, where you can make an offer, and all the deadline sale, as you said, are a lot more user friendly for first home buyers.
Only start spending money
So
once
that
you've
makes a
had
lot of
your offer
sense.
accepted.
Mm.
And that's
Yeah,
super
makes a
important
lot of
if you're
sense.
really a first home buyer. You're pretty much usually
Mm.
cleaning out the cupboards
Mm.
just to get the deposit required in the first place. You haven't got a lot of money hanging around
Yeah,
that you can sort of willy
yeah,
nilly spend on auctions here, there, and everywhere. And that's where
yeah,
the price by negotiation and deadline sale are huge advantages. Yeah. You wait,
yeah.
your offer's
Awesome.
accepted, bang, now I'm prepared to spend some money. Yeah.
Yeah, fantastic. Well, thanks, Scott. The advice today has been amazing in this space. And for those that are listening, how can they get hold of you, Scott, to talk to you about buying a
All of the
property?
contact details of me and the other advisors are available on our website. There's also, forms to fill in on the website to start the process, to speed the process up. There's contact forms, phone numbers, emails. It's the one place to go, and you can get all of our details from the website. Yep.
Awesome. And just to clarify, your services are
That's
free
right.
for those that want
Yep.
to.
The
Yep.
banks pay us for our
Awesome.
services, so we don't charge a fee.
Brilliant. All right. Thanks, Scott. Thanks for today. Thanks, everybody. We'll see you on the next episode. Reach out to Scott if you need help. And we'll catch you soon. Thanks.